Hello. My last deep drill into Paysafe was released on the 25th of May, 3 months ago. Back then I laid it all out that Paysafe was one of my 5 all-in stocks, meaning I was only going to be adding to this position. Back then, Paysafe was trading at $11 and some change. My current average price is around $11.50 after averaging in more shares when it fell under $10. Since then, Paysafe has released their Q2 earnings and the stock literally tanked to $8, close to a 30% decline. Ouch! Were the earnings really that bad?
Oh, hell no.
Am I still bullish on the stock long term? Hell yes. What's the latest news on the stock that's given me even more conviction moving forwards? Stay tuned for this and more. Keep it simple. I am not a financial advisor. I am just a simple trader looking for WPG situations. Yes, explosive exponential potential growth. So please note, this is all for entertainment only. No more plugging. Let's start drilling. The late American business executive and former chairman and CEO of General Electric, Jack Welch, once said, "Number 1, cash is king. Number 2, communicate. Number 3, buy or bury the competition." For Paysafe and CEO Philip McHugh, it seems they are buying the competition in the form of several key acquisitions. On 2nd of August, Paysafe announced that they had acquired PagoEfectivo. Who? PagoEfectivo are a market-leading Peruvian alternative payments platform. This acquisition provides Paysafe a strategic foothold in Latin America, which they note is one of the world's fastest growing online markets, where merchants and consumers alike are demonstrating an increased appetite for alternative payment methods and online banking solutions. This includes e-cash and online banking payments that allow merchants to offer alternative payment methods at the checkout, which in turn enables more consumers in the region, many of whom are underbanked, to transact online. Founded in 2009, PagoEfectivo payment options are now used by millions of Peruvians, as well as neighboring consumers in Ecuador, where it also operates. It's no surprise to me that these solutions in particular are popular with merchants operating in the iGaming, digital goods, travel, and e-commerce industries. Remember, Jack Welch, buy or bury the competition. This is, for me, a huge acquisition that should reap huge returns in the long term for Paysafe. You would have thought this acquisition should be big enough to expand Paysafe's business within the growing Latin America regions. You would be wrong. On August 16th, Paysafe announced another acquisition, this time for a company founded in 2007 called, are you serious? Safety Pay, for a $441 million all-cash transaction. This transaction will drive multiple cross-selling opportunities across all of the Paysafe business units and enhances long-term growth prospects. I love the strategy here, and as the release states, together with the acquisition of Peruvian PagoEfectivo, who? PagoEfectivo, they will set up Paysafe to be the leading open banking and e-cash solutions provider in the whole of Latin America, one of the world's fastest growing online markets. Safety Pay is an e-commerce payments platform with the mission to enable millions of consumers to use alternative payment methods, most notably bank transfer and e-cash solutions to make online purchases. It is in 11 Latin American countries, but also has a presence in Europe and operates via an unparalleled network of banks with over 90% bank coverage and over 180,000 cash collection points. It serves nearly 300 merchants, primarily in the travel, entertainment, and digital goods industries, with 2 massive, huge, giant acquisitions cementing Paysafe's position in Latin America. You would have thought they would stop there. You would be wrong again. Because on the 22nd of August, Paysafe announced another acquisition, and this time in a German market-leading fintech company founded in 2011 called Via Fintech, in an all-cash transaction, the value of which was not disclosed at the time of the release. This acquisition will accelerate Paysafe's growth in Germany, which is a key economy in Europe and where its consumers continue to move away from the legacy banking systems. Via Fintech integrates with digital banking apps to offer an innovative mobile ATM concept which enables consumers to make deposits or withdraw cash from their digital bank accounts at nearby retail stores using a barcode. Via Fintech solutions are also used widely for bill payments and credit payouts, as well as for online shopping in general, supporting millions of consumers in the region who don't have bank accounts or who simply prefer the heightened security of using e-cash to pay online. Via Fintech has a market-leading position within Germany, but it also has a presence in an additional 5 European countries with more expansion plans in the pipeline. With Via Fintech, Safety Pay and Pago Efectivo all acquired, Paysafe will be able to offer e-cash and open banking solutions in over 60 countries with over 1 million distribution points. Let that sink in. I can see Paysafe making more acquisitions in the coming months as they're clearly looking to buy the competition in order to bury the competition.
In terms of the deal basics, your Safety Pay was $441 million all-cash transaction. With Pago Efectivo, it's about $550 million in total. We expect about $60 million of revenue and $20 million of EBITDA next year from those two pieces. Historically, the two businesses have had a CAGR the past 2 years of about a 55% top line growth rate. So they're very fast-growing businesses.
On the 16th of August, Paysafe released its Q2 earnings, and the stock managed to tank 15%. Are you kidding me? The basis for this seemed mostly due to the results not meeting the analysts' expectations. This was clearly a Wall Street hit job. And you'll see why when we take a quick drill into the numbers. The highlights year over year are total payment volume hit $32.3 billion, a whopping increase of 41%. Revenue spiked to $383 million, an increase of 13%. The next metric is big. Net income came in at $6.6 million compared to a net loss of $15.9 million. Do you see the impact that Bill Foley has on Paysafe yet? Even adjusted EBITDA of $118 million came to an increase of 8%. Further to all of this, Paysafe reaffirms their 2021 full year outlook. One of the key areas I see Paysafe dominating in is iGaming, and they confirm their dominance by reporting a whopping 48% revenue growth in iGaming within North America. What is Bill Foley known for? Cost cutting and streamlining businesses to succeed.
Now turning to transformation. The playbook we implemented with Bill Foley continues to make good progress, driving cost savings and accelerating key initiatives such as our tech migration and banking as a service. This year we are targeting around $30 million of cost savings, which is about $45 million annualized. June year to date, we've delivered $17 million, so we're well on track.
Paysafe reported $17 million of cost savings achieved so far of the $30 million targeted for 2021. They are clearly on track to hit this target with some change. What about the one thing we keep reading about, which is the debt that Paysafe has on its books? Well, on the balance sheet, we clearly do see a reduction across the board in debt and their liabilities, which means the reversal for the business has begun. This is exactly what Bill Foley brings to the table when you realize he did the exact same moves for Fidelity National Financial, and look at where they are right now. The institutions have loaded the boat on Paysafe stock, and the stock price managed to plunge. Does that make any logical sense to you? Clearly something is cooking. There are two new positions that we should pay particular attention to, and that is the largest asset manager in the world, Blackrock and State Street, who are not that far behind, have both loaded in stock of Paysafe. Blackrock purchased 8.3 million shares and State Street 2.6 million. What does this mean for the stock? I think it means the stock must have hit its bottom, and the dip is ending, as we could see a strong bullish run-up imminently. To summarize, Paysafe is my lock-in fintech play for that double EPG. I see this stock as a triple-digit behemoth in the making. This recent dip to me seems unnatural and presented a great opportunity to load the boat. I loaded in more and did not sell a single share, as I see this as a lock-in long-term hold to the moon.
Yeah, our volumes are going to come in, meaningfully higher. We think, probably closer to, 130 to 140 billion actually for the full year. But again, that's just depending on how quickly or how fast integrated processing really grows. But it's definitely higher than what we thought earlier in the year.
If you need some deep drilling into what Paysafe do, then please check out my previous drills into their business outlook and growth potentials. Thanks for watching, and please note I'm extremely bullish on Paysafe, so please take this drill with additional precaution and always do your own due diligence. As legendary fund manager Peter Lynch once said, know what you own.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks.
If you are interested in other EPG stocks that I have in my Freedom portfolio, please check out my other videos and just consider subscribing to my channel so you can get a pop-up when a new video is uploaded. I am a simple trader and I try to keep this simple, and will simply see you in the next video.